Let's get in Taher Badshah, CIO at Invesco Mutual Fund, to talk to us as well of what's in store in terms of 2026 expectations when you talk about the budget as well, and what could be, Taher looking at from investment perspective. Taher, welcome to the show. Always a pleasure to speak to you on NDTV Profit. This is Hiral on this side. My question coming to you is, we've seen what's happened with India. We're talking of premium valuations, where valuation somewhere has cooled off slight a bit. So there is that little bit of comfort that is coming in. Where are you finding value when it comes to the growth market like India, number one? And two, that we are pretty close to the budget right now. How are you looking at what the gyrations that are happening?
So, Hiral, look, I would say that, while we have seen underperformance of the market relative to developed markets as well as emerging markets over the course of the last 12, 15 odd months. And to that extent, valuations relative to emerging markets have probably cooled off a little bit. Our premiums have cooled off. But, we are not really cheap still. I mean, even at an aggregate level for the Nifty, we are at about 20, 21x, depending upon what numbers you essentially put for earnings in FY27. And earnings in FY27 are also not fully given as such. I mean, while we are seeing a somewhat improving trend quarter by quarter, and we probably will hit double-digit growth now for the second quarter in a row on an aggregate basis. But for the Nifty, it still is driven by certain sectors which perhaps may not necessarily be very resilient. I mean, going forward, and we can't necessarily bank on it. Like, for example, oil and gas and commodities probably see a big surge, but this quarter. But on a sustainable basis, to get to that double-digit growth or mid-double-digit growth is still something that we have to watch out for. So I think to that extent, valuations are not exactly very comfortable at this stage. Yes, what we are looking forward to is basically mean reversion. We have had mean reversion. We can possibly see mean reversion in many ways in the market over the next year from a macro standpoint as well as an earnings standpoint. And in that, can India probably outperform? What does it therefore mean in terms of absolute returns is still up in the air, but can it probably do better than many of the other world markets and recoup some of its underperformance of 2025? That's quite possible. So we would look at the market from a mean reversion point of view for the near future.
Taher, good morning.
Morning,
here. And the broader 2026 picture, after the serious bout of underperformance that we've seen relative to emerging markets in 2025, GST cuts, interest rate cuts, hopefully some consumption, etc. Can a back-ended recovery look certain as the market start discounting FY27 earnings even more strongly?
Well, I wouldn't really go to the extent of saying that it is a certainty, but probabilistically, yes. I mean, there is a possibility of back-ended recovery coming through. We also need a little bit of support from the external sector, which, as you know, is not really forthcoming till the time we have settlement with regard to trade and tariffs. So I think where we are basically is that, look, like as I said, I mean, we are essentially looking for what we can have best hope for probably is a cyclical recovery. Some of those factors which are there in play, GST rate cuts, etc., are what we are all anchoring towards. But we have not really seen interest rates, for example, while repo rates have fallen, interest rates have actually not come off as meaningfully in the system at large. What we've seen actually in the last quarter or the last 3-4 months with regard to demand post GST, etc., is not very conclusive in terms of whether we are seeing the benefits of GST. We need to probably see Jan, Feb, March, and maybe April, May, June as the possible months wherein we can distill whether the demand which is coming through is it showing strength on its own merit or after GST, or is it clouded by other things? Like, for example, we had the festive season going on simultaneously in the last some time. So I think in there too, we are not, it's very difficult to say conclusively. We have seen only a few categories based on data, which actually have seen some good growth after GST. I mean, probably autos is one such sector volume wise, which has done well. We probably can, or maybe travel and tourism as part of that industry, that sector probably has seen some benefit. But otherwise, in many others, the benefit of GST has essentially not translated into volume growth, and most of it has actually got passed on to the consumer without any commensurate or significant volume growth coming through. So I think some of these things are all watchable. I'm not necessarily saying that this will not come through, but this is something which, as you rightly said, is what we can best hope for from a back-ended basis.
Got it. Okay. Taher, so would it be therefore fair to assume that you are not constructive? I mean, I'm not saying you're negative, but you're not bullish market-wide. You might be constructive on a bottom-up basis, thematic basis. So one part of my question is that. But part two of my question is, would you be more skittish or skeptical as opposed to being bullish right now, any which ways?
I would say I'm inconclusive at this stage, whether I'm skittish or not. Hard to say, but like I said, we've been running with subpar revenue line growth for a good number of quarters now, maybe 10, 12 quarters in a row. And much of the earnings, whatever we've got in the last, let's say, 1.5 years, has probably been sustained by margin improvement. And what I've started to learn and pay a lot more attention to and give a lot more respect to is mean reversion in the market. And in many ways, I mean, whether in every possible way, or whether it be, the strongly growth-oriented stocks and some of the strongly value-oriented stocks of the past. So I think, and everything therefore is a watchable. Like, for example, I would say that even today, I would think inflation, which we are taking as a given, is a watchable from a mean reversion point of view. When we look at what's happening in the oil market and some of the other commodities gradually, how should we think about inflation towards the end of 2026, if not in the middle or the start of 2026? And therefore, how should we think about interest rates? Mostly, it looks like we are at the bottom of the rate cut cycle from that standpoint. How should we think about the INR and the dollar? Can the dollar appreciate, and can the INR probably also strengthen a little bit or stay where it is? So, and therefore, to that extent, even the Indian market, I mean, can it outperform? But outperformance does not necessarily mean a lot of strong absolute returns, right? We might probably do better than the other markets in a way, but do we have the wherewithal to be able to actually generate 15% return? I would think it is still the jury is still out.
So Taher, we're talking about the earnings growth the way you're expecting it in the second half of FY26. Now, if the markets have to see an upcycle from here on, how important is it going to be for the broader market participation to come in beyond the large caps? And what are the catalysts that you should be watching out for this mid-cap and small-cap uptick to happen?
So, Hiral, what we need is basically indications or reasons to believe that we are in for a broad-based economic upcycle. At this stage, it is a more tentative assumption of an upcycle, and I would also want to go with that assumption at this stage. But we need a lot more evidence. I think to that extent, maybe the upcoming budget probably might throw some clues in terms of government policy towards accelerating the system rate of growth. I mean, can we provide a certain amount of leeway on the fiscal? It's a little tight, I agree, because we've lost a little bit of revenue on account of GST. So it will take a little bit of effort in order to even hit the 4.4% for this year. But I think can the message be that the government is reoriented towards growth, even at least in the short term, keeping in mind the issues related to tariffs, because the external sector is a drag at this stage and can continue to be a drag as we go along into 26. So I think what we are looking forward to is a broader based recovery and indications towards that. If that were to happen, then I think the broad market comes into play. But nonetheless, I would say that for broad market, maybe I might be a little skeptical about the 1 year cycle, but on a 2-3 year cycle, generally, I think I've observed in my experience as in managing small caps, mid caps, etc., that whenever these are down, whenever these are and not exactly in the limelight, they are shunned by the market, and on a trailing basis, they have underperformed, etc., negative returns. I think that generally becomes the best setup to look at broader markets, invest in them on a piecemeal basis. But from the point of view that can you look at a 3-year cycle instead of a 1-year or a 2-year cycle?
Taher, there is a fair degree of new noise coming in as far as Chinese policy goes and Indian policy goes too. If there is this talk of India allowing Chinese firms to bid for critical cap good related or infrastructure related projects, China has also done those export rebate moves over the weekend. And now, where does this, I mean, it makes the situation even more complex from an investing perspective, right? The tried and tested themes over the last 2 years maybe suddenly undergo a bit of a change, both for the positive and the negative.
Absolutely.
How do you wrap your head around this? Please tell us how you think about this, because it's very confusing for a lot of people.
It is for us as well. I mean, but we just have to break it down piece by piece. And even when we look at some of these new things, new policy initiatives, they are not yet in place. By the way, as we given to understand that there is still no final word on it. But assuming that there is any truth to it, I think the way we are breaking it down is that, let's say, the generation part, the BTG part, is where some capacity constraints are visible, and maybe Chinese, entry could, or Chinese opening up of that part of the market could probably benefit India, because it will allow us to override some of the supply or capacity constraints. But I don't think, as we understand it, once again, transmission probably is at lesser risk to that extent, both from the point of view of national security issues as well as in terms of technology. So I think that just gives us a little bit of comfort in terms of where we should probably head within the power value chain. So I think that's how we have to, essentially make our decision making. We have to break it down piece by piece and then try and see value. But suffice to say that, I mean, policy changes or some confusion regarding policy is not exactly welcome, and it does lead to at least shorter term derating or confusion in the market. And as far as possible, if we can avoid that or provide clarity as early as possible, that is generally welcome.
So that's with regards to what's happening, the kind of, views we are getting in when it comes to China and what they are doing when it comes to India opening up certain things for them as well. But on the global strategy, Taher, what I want to ask you is lots that is happening, right? I mean, there are countries who are in war situation across. It's a year full of surprises, a lot of uncertainties that are coming in as well. In a time like this, I was reading one of your reports as well, where you had mentioned about the 5 mega forces that one should be watching out for. Should that new playbook actually look like for 2026?
So, what we are, I mean, this has been my kind of new position for the last maybe 12, 15 odd months, that exactly this, that, we are going to see a lot of moving parts. We're going to see a lot of things which have no precedence of the past, whether it be in geopolitics, geoeconomics, etc. So to that extent, we have to take it as it comes. And therefore, from the point of view of investments, the best strategy is to diversify. And that's why I've been a fairly vocal advocate of multi-asset kind of strategies. This is the best way to go till the time we see this phase through. And that, as you can see, as a category has done exceedingly well in the last 1 year. We may attribute it to gold and silver, maybe, but that's not all what has been at play. I think even the US markets, for example, have done exceedingly well. Maybe if you could have probably even in India looked at some of the larger caps versus, let's say, the mid and small caps, that could have also probably kind of helped you a lot along the way. So I think I still remain in the camp that this is something, the multi-asset type of products from an investment standpoint should become a little more mainstream, and not necessarily only hinging themselves on gold and silver or precious metals. I think by rotation, by mean reversion, we will have opportunities across, and this probably will be the multi-asset will be the theme, or the continuing theme probably to my mind will be rotation and confusion.
Okay. Taher, this is lovely to know, but I think I would love, Taher, if we can do a conversation maybe end Feb or thereabouts and not with a lag, because simply there's so much happening, and would love to kind of do a focused conversation with you and your intellect around how to make the most or think about most of the recent news flow. So would love to do that, please.
Certainly, we'll converge on that, and hopefully by the timeline that you suggest, we'll have gone past the maybe even the earnings season, etc. So we'll
Yes.
probably work with a little more data by that time.
Sounds good, Taher. Thank you so much for taking the time out today.
Thank you very much, Neeraj. Thank you.
All right, just before we wrap up, Hiral, there is a note that has come to me. I think this is a sales note from one of the brokers, and apparently 6 800 megawatt boilers have gone to Babcock and Wilcox, China. Now, this is to be confirmed, of course, but this doesn't impact the total addressable market from NTPC and the discoms, because those would anyways probably go to the Indian guys, but need to keep an eye out for what is happening to some of the others, which BHEL had a potential of bagging, but might be going to some of the Chinese firms which had a presence already here. I think that is probably one reason why BHEL is under pressure today.
Probably, and I think we will try diving deeper into it as to what it would actually mean and look at other aspects as well during the day, but completely out of time. With that, it's a wrap on this edition of India Market Open from Neeraj, the team that put the show together, and myself. In fact, lots more lined up on the other side. You have Ask Profit up next. Stay tuned for all your queries.